What's up, everybody? Chris over here, founder of Pollinate Trading, and today we're going to be talking about prop firms. Specifically, we're going to be doing intraday trading futures prop firms here in the United States. If you're outside the United States, you can still sign up with these firms, but they're just based in the United States, and they trade the CME, CBOT, the different regulated exchanges here in the United States versus some of the Forex, CFD, unregulated international prop firms. Nothing against them. Just this is regulated and they're in United States companies. And if you want to trade futures with the best spreads and the best security on them, that's where that's at. The overseas stuff is you're kind of like in a bunch of decentralized exchanges. So you're trading like on one broker's platform, you're trading with another dude as opposed to market making firms and hedge funds, everybody else in the world. Anyway, let's get right into let's get into it. All right, day trading futures pro trading firm. Here's your disclaimer. All right, let's go. So this is the prop trading course. I'm doing it absolutely free. I have other courses that I charge for on the site. You're welcome to take a look at those, see if you want those or not. But this one's free. And I'm putting the best stuff I got about prop trading, the real legit prop trading stuff in here. That this is the stuff you really, really need to know. I'm doing it for free because one, I love talking about this stuff. Two, I don't think that enough of this stuff is available for people. And I know that these prop firms are making, incredible amounts of money on tryout fees and paying out very little in profits. And I want to change that. No offense to the prop firms, but I'm on the side of the trader. So all I ask is you like this video, subscribe to the channel, and share it with a trader who you thinks needs it. And there's an agreement between us, you and I. In exchange for doing this free stuff, I just ask for you to just like it and subscribe to the channel. So far, we've covered why trade prop, why you need a trading system, how to use risk management in prop, choosing a prop firm, and then long-term success in the game of prop. Today, we're kind of doing a 4.1 or something. We're talking about different types of prop firms. And I got a lot of questions on this. And so I just chose the one that has the most amount of people are using right now, which is Apex and the futures ones. So you profit in Apex and Lilo and Elite and all that. So we're kind of break it down how to look at those places and how to go about it. Okay, so one thing to remember. I said this in the first video we did, why you trade prop. Because if you can return 200% every year, that's either amazing or barely useful. If you return 20% on a $5,000 account, that's about $1,000. And that buys about a month's worth of groceries in the United States. It doesn't really move the needle. But if you return 20% on a $5 million account, that's $1 million in profit. And that is a lot different. And that's why size matters. It's no surprise. But I just want to keep reinforcing that it's the size of your stack when what you can do with it. You have a $5,000 account, you have to do amazing things to make big money on a $5,000 account. On a $5 million account, you just kind of need to be mediocre. And it's still hard. I also want to reiterate, you don't need to have a prop firm. You could have a big account. You could be trading your own place, doing your own money, never need to apply for a prop firm or do any of that stuff at all. You don't need to do it. But this stuff still applies to you. You still need to know how to manage risk. You still need to know how to go for profits. You still need to focus on what's actually important and not getting caught up in all the other stuff. We are going to go deeper on the intraday prop firms. So if you're subscribing to this series, you're like, you know what, I'm finding a lot of success here. Chris is saying some good stuff. I don't trade prop, but I got my own couple $100,000 account, whatever it is. And he's helped me so far. This one might not be for you, but stick around or give me a like. So we're going to go a little bit further on intraday prop firms. One, you can't hold overnight. You trade futures exclusively. And I got to say, this stuff is dominating the trading world right now. So there's a handful of prop firms here. I just chose these. Top Step Trader, Apex Trader Funding, Elite Trader Funding, Lilo, T3, UProfit. There's a bunch of them. But this is kind of a handful of them. And we're going to talk about Apex Trader Funding today because I got the most requests to talk about this one. And they're having they have these big discounts going all the time. So it's usually the cheapest to get involved with. And everybody's interested. So the number one reasons to use Apex is they have massive discounts on the cost of trying out and the monthly recurring fees. So right now there's an 80% discount. I'll put a link in the description down below. You click on that and you save 80% on so it's like $30, I think, for a $50,000 Apex account. Super cheap. And then every month it's like $30. It may be 50, 40 or something. I don't know. I forget. And the cool thing about that is you can scale that up to 20 live accounts. So instead of just doing like one account and, doing good with it, you apply a trade copier and you just trade the same way you would. You just happen to have 20 accounts doing it with you. No reason to start that right off the bat. You can add these accounts whenever you want. And I highly recommend, if you are going to do the multiple account thing, that you add them, not just one big lump. They have a Windows and a browser base. They use Trade8 now, so you can connect that through TradingView, so you can actually trade from TradingView or Ninja Trader on Windows. So one of the biggest issues I have with these, and we talked about this in the last video, I think, the incentives aren't aligned in that they make the most of their money from tryout fees. And trading profits cut into their bottom line. Now, I can't 100% confirm that this is true. They may make a bunch of money off trading too, and all that. And I don't know, but that's pretty much the view. Also, you can't hold overnight or over the weekends. And one of their big issues is their intraday drawdown rule, which we'll cover at the end. Also, the headlines trick you. And we're in the era of headlines tricking people, right? That's clickbait. That's like, you don't click on the article that says a sound argument for why keeping the temperature at, I don't know, 72 degrees in your house year round is good for, I don't know, 1% savings annually. That sort of headline won't work. If you're, let's see if your thermostat's 2 degrees higher than this level, you could burn the economy or something like that. You could go bankrupt. See, it tricks you, but you read it. You're like, oh, wow, I need to know the temperature in my house. That's going to blow up the world if I do, whatever. I'm done. So they advertise the size of account you get. And really what that is that's the buying power. That's the max amount of buying power that you get. It's not really important. So you can go out and buy 20, $300,000 accounts and say you're trading $6 million, but your drawdown on a $300,000 account is $7,500. So you're actually trading $150,000. You're only trading the drawdown, because if you lose the drawdown, you lose the account. So you need to change your mind to think about how much the drawdown is, right? And so these are the different accounts, and I didn't do static account. This is just the different accounts here. From $300,000 account, $7,500 drawdown, $2,000 or $20,000 profit target. Here's all of them broken down for you right there. Now, most people see, okay, a $300,000 account. That's the one I want. I can afford that, especially an 80% discount. That's what, $100, $200 or something like that. Of course, I'm going to go for that. And then they realize that it's really hard to actually hit that $20,000 profit target with only a $7,500 drawdown. And that's because it's all about the ratios. Okay. You only have a certain percent risk in the account, risk to profit. And I broke down these ratios over here. So the $300,000 account means you need to double 2.6x your risk. So if $7,500 is your drawdown, you need to 2.6 times that, or 150, 160% profits of your drawdown to hit that $20,000 target. So just look at the difference here. With $1,000 less drawdown, you get $5,000 more or less profit target. If you go down to a $5,000 drawdown, you only need to hit 9,000 targets. So $2,500 in drawdown, the difference between $2,500 in drawdown is $11,000 in profit target. And you'll notice the ratios over here. This is what they are. 2.6 is the worst, and 1.1 is the best. The $25,000 account, you have a 1,500 drawdown and a 1,500 profit target. That's the only one that you can. You only have to double your risk. So that's 1-to-1. That's the only one that's 1-to-1. So the one I prefer is the $50,000 account, because your profit target is 3,000 and your drawdown is 2,500. They're a little bit, the 150,000's okay, but it's still, it's kind of up there. And honestly, you're going to want to go a little more laterally with these than you are vertically as far as the account size. And I'll show you why. So with Apex, you can get up to 20 accounts. Actually, you can do up to 60, I believe. You just need 3 different entities to sign up that you're running. I don't know, can't confirm that, but you could see where that could be, quite lucrative. The cool thing about it is, let's say you do Apex, they also offer a trade copier. They have their own trade copier made for Ninja, made for Apex. Like, it's just them. So you don't have to, there are a number of different trade copiers out there. Bruno Meza is awesome, especially if you speak Spanish, because brunomeza.com is his name. He'll get you hooked up, and it's pretty cool. Like, I got him to do 20 accounts for me, and I just paid him $100 on PayPal to log into my server and just set them all up, and he did it. I don't know if he'll do that for everybody, but he's awesome. But the one that comes with Apex out of the box is sick. There's Replicanto, which is kind of cool if you're using, across. So let's say you're running a Apex and Lilo and like all the different firms, you can use a thing called Replicanto, and that'll use different. So you can just put everything on different servers. There's sandboxes depending on your technical skill level. You might like a Docker instance. There's a number of ways you can do it to make it all happen fairly clean. But the simplest is Apex's own trade copier that works. And by the way, the Apex one, if you end up using a different Ninja trader, like if you go Lilo or Elite or any of those others, and you're still using Ninja Trader, their trade copier works with that too. Okay. Now remember, your account is really your stop loss. So let's measure. If you buy 10 accounts, that's actually $25,000 worth of account, right? That should say 30,000. 3K accounts should say $50,000 accounts, but 3K means your profit target, 2,500 is your stop loss. So you have a $25,000 account with 10 of them. You have a $50,000 account with 20. Okay, that's mildly interesting, but I'll show you what that all means. For each $50,000 account, your max drawdown is $2,500. So again, think in your mind, not a $50,000 account. You have a $2,500 account. That's what you're trading with here. Okay, that's your drawdown. You're fired. You're cut. You're out of the game if you go below the 2,500 drawdown. Now, remember in video 2, we talked about why you need a system. In video 3, risk management. These concepts come into play here. So if it's going to be a little over your head, go back to those videos and learn about systems trading and risk management. So if you know what your max consecutive losses in your back test is, in my case, it's 10 max consecutive losses. I give myself a little margin of error. So I say 15 max consecutive losses. I divide the total drawdown, $2,500, by 15. That gives me the risk per trade, $166 risk per trade. So if I'm wrong on a trade, I lose $166, 1R. If I'm right on a trade and I hit 2R, that's $332 in profit. So let's get into position sizing here. If your risk is $166 a trade, 1R, your win rate is 50%. Your average win is 2R. Your average loss is 1R. That makes your average trade 1R, right? 2 winner, 1 loss. I think that works. Your profit target for your $50,000 account is actually $3,000. It's not $50,000. It's just $3,000 profit target. So your profit target is 3,000 divided by 166. That's 18 trades. It'll take you 18 trades using this method, using the Curvy trading system or any 2-to-1 type system laid out like this. It should take 18 trades as long as you're following that thing. Now, remember, there's going to be, over the course of any trading system, the first 10 trades is sporadic results. It's not reality. 100 trades is more accurate. It's kind of like up. And then 1,000 trades is very accurate. So you can sit here and think to yourself, oh, it's just going to take me 18 days, but I guarantee it's probably not going to take 18 days to pass or 18 trades to pass your tryout. But just understand that's like best case scenario, and that's what you're working with. So you need a system because it's not about, let's talk about what a successful prop trader is not. Successful prop traders are not here to make wild predictions about the market. Who cares if you think S&P is going to 4,500 or 3,500? Who cares if you think there's a recession? Who cares if you think there's a bull market? None of it matters. Because what you're here to do is just make money, right? It's not your job to have huge swings up and down in your account balance. It's not your job to show off to the prop firm that you can make cajillions of dollars in a few minutes whenever you want, because you can't. It's not consistent. You may be able to do it one day, but you're not going to be able to do it consistently. But the real job of a successful prop trader is to maintain a 50% win rate at a 2R profit and a 1R loss scenario. Be consistent. And you want to scale up horizontally, number of accounts, not vertically in big trades. It's easier to go that route. And so you want to go with the more accounts with good ratios. Remember, we talked about ratios. If you make 1R per day on one $50,000 account, that's $166 a day. You'll hit your 2,500 or your 3,000 in whatever, a month. If you make 1R a day on 10 of those accounts, that's $1,660 a day. And if you do that on 20 accounts, that's $3,320 a day. I mean, I have to do it. 20 trading days. Yeah, 66 grand a month. Come on. I don't know, man. You should be able to do it. Should be able to do it. I guarantee it's not a straight road. I guarantee it's going to be challenging to get to that point in your life. But when you can get to that point, I know people have done it. I've made good money like that. It's doable. And I'm telling you, it's doable if you're here to play the consistency game over the long haul. If you're here to play the cajillion dollars whenever you want game, you're going to leave it all on the table. But if you're here to just bang it out, a couple days a week, you're profitable. A couple days a week, you're not. You're just more profitable on your winning days. Over time, it's going to work out. That's also why I say don't do the 20 accounts right up front, because if you don't hit it within the first month, you'll have to reset the next month. And that will be a tax on you and your trading that you're just not used to. It's just not comfortable. It's not normal. Okay. So I said that we would talk about intraday drawdowns, and this is the elephant in the room with Apex. The biggest challenge that people have with Apex is their intraday drawdown. So you can never let your peak intraday high water mark go below 2 point. So you can't go up X high and then drop 2.5%. Let's say you had a runner. Okay. If you had a $50,000 account and you ran up $2,500 in profit, and then you're like, okay, well, it's all profit, whatever. Maybe this thing will rip, and I'll have a $10,000 profit day. Maybe it's one of those days. So I'm just going to put a stop in at break even, and I'm going to go to breakfast, or I'm going to go for a hike, or I'm going to go shopping, whatever. And then you come back and you stopped out at $1,000. That's 2.5% from the peak. That's over 2.5% from the peak. And you would have failed. Even though you walked away with $1,000 profit, you would have left $1,500 on the table, and that would have been below the 2.5% intraday drawdown. Okay. So when you're trading these, this is why a system like the Curvy system is good at managing risk, because you just never get to a point where you're doing peak and drawdowns that are bigger than 2.5%. It just wouldn't happen if you're running the system correctly. And that's why we built the Curvy trading system. It's specifically built with the intraday drawdown rules in play. If you're not doing Apex and you don't have a thing where intraday drawdown rules, great. You can adjust the Curvy system. We have a couple of different adjustments, Curvy 1, 2, and Curvy 3, which we're releasing this week. Keep yourself in the game, slow and steady, and be consistent. By the way, you can go to pollinatetrading.com/prop, and I have the different prop firms that I've worked with that I like, that I think are great to trade with. Just click on the link. If you want the discount on Apex, go to the site, pollinatetrading.com/prop, click on Apex Trader. It'll give you that link. Use the Save 80, SAVE 80, and you get an 80% discount on that. And if you want a discount on the Curvy trading system, pollinatetrading.com/prop, just click on the Curvy trading system and use the discount code PROP50. In fact, the link should take you to the 50% discount anyway on that. So if you want the 50% discount on the Curvy trading system, dude, we are releasing, I called you dude, we are releasing the version 3.0 of Curvy, which is for the advanced day trader who wants a lot more firepower on their winners. So losers stay the same, but you have chances to go from 2R, 3R, 5R, 20R using a little bit more advanced volume market profile type scenarios along with it. So pollinatetrading.com/prop, go there, prop50 discount. It should take you the discount anyway. And then finally, now in the comments down below, let me know what prop firm I should look at next. If you have questions on Apex, put it down below. Let me know. What is maybe you're trading with a prop firm and you're like, you know what? I've got this $150,000 account at this firm. What do I need to know? Like, go in there and analyze it. Tell me how to structure it, do all that. Do it, put it down there. All right. Okay, guys. Thank you as always for everything. Find me at Christy Macro on Twitter, and of course, pollinatetrading.com. And I love you all. Bye.